Good morning. I'm Dean Heskin, President and CEO of Swiss America Trading. You are tuned in to our podcast entitled The Secret War on Cash. I have with me my frequent co-host, Chris Agelastos today. Chris, how are you?
Happy to be here.
Happy to have you here. Everything good in your world?
Yeah, no complaints. I got both my girls actually are going back to college next week, so we got a lot on the plate, but it's all going smooth. I'll be moving in the heat a little bit next week, so pray for me. But yeah, aside from that, everything's going pretty well.
And you've got your oldest is senior this year in college?
No, she's going into her junior year, and my youngest is starting her freshman year. Both in-state schools, but different schools. You know, they couldn't both do what the other one did, so we split them up a little bit.
One of them I know is a fine institution. The other one, you know, that kid's going to have a tough road ahead of him. For those of you tuning in, this is a ASU U of A dilemma, and we don't have to. I don't have to tell you where my allegiance lies, but if you look over at my shoulder there, you might see
you're biased
a little bit.
Yeah, big rivalry.
All right, well, let's get right after it. Let's talk about the banking system today. The FDIC report reveals an alarming $7.7 trillion in uninsured U.S. bank deposits.
Yeah.
Now, we hear this number trillion thrown around like crazy these days.
Yeah.
I'm still of the belief $1 trillion is a lot of money.
Mm-hmm.
We all, I would think by and large, have bank accounts. Mm-hmm. And where that 7.7 trillion fits into the entirety of our banking system, it's not all of the money, but it's a fair amount. Well, we can say that I think pretty safely.
Yeah.
But no matter big or small or what percentage this represents, the concern is I don't think anybody, like, we put our money in the bank because we want to keep it there for later. That's the concept. In some cases, we want to maybe make a little return or interest on there, on the money that we put in there. However, that's probably less a motivation anymore than what it was many years ago. However, the bottom line is, no matter big or small, as I mentioned, I don't think any of us wants to know that as we're putting money to these banks for some future purpose, we don't like to hear that word uninsured.
Right.
The whole reason the FDIC exists is to once upon a time, and I wasn't present at those meetings, but I would have to believe it exists because it was put in place to give an assurance to depositors that their money is okay. Mm-hmm. And when you start hearing about now the money not being insured or perhaps not okay, that's reason for concern. So is this something that, I'm not suggesting per se that everybody should run out and take their money from the bank, because it's kind of a necessary evil, if you will, or necessary. When I say evil, that's probably a wrong choice of words, but it's just a necessary component of life.
Sure.
The bottom line is, Chris, is this something that we should be concerned about? I mean, is this yet another vulnerability that exists in our banking system where our money may be at risk?
Yeah, definitely. It's to me, it's a concern, and like you said, that word uninsured, right? If if your house was uninsured or your car was uninsured, you probably wouldn't sleep so well at night. And in fact, they pass laws where we're required to have insurance. At least in Arizona, you're required to have auto insurance if you want to even drive. Yet I can put my money in the bank, and it doesn't all have to be insured. So it's definitely it's something to I think people need to be aware of, obviously, which is why we're talking about it. But what was interesting to me is that everybody remembers probably 2008, 2009, 2010. It was some tough years. Housing crisis. We had a lot going on, right? Big market crash. Well, back then there was about 2.3 trillion in uninsured deposits, and now we're up to 7.7. So it's tripled. The amount of money sitting in the banking system has tripled, and so that inherently there's more risk in that. And people.
And let me not to interrupt you. Yeah. There is more risk in that, and it's interesting you bring that point up, because it's at a time when we really can't afford any more risk, because the problems that are kind of exist or stemming in from the various areas of our financial system, our economy, are growing by the day. So like
Right.
not only is it a problem that this is happening, but it's couldn't happen at a worse time in a manner of speaking.
Yeah, and it's more what's even scarier about it. Really, it's a lot more risk as well because a lot of banks have consolidated since 2009. We don't have nearly the number of banking institutions that we used to have, and something like 85% or so of all of the nation's deposits are in the top 5 or 6 banks. So it's a small number of banks that have a large percentage of these uninsured deposits. And where that scares me, I don't have a whole lot of uninsured money in the banking system because I unfortunately don't have a lot of money. But where the problem comes in, and like you said, if people all of a sudden decide to run to the bank and pull their cash out, that's the real concern here. Because if a bank run starts and people start pulling money out of the banking system, like we saw with the SVB, the Silicon Valley Bank last year, then it can affect all the other depositors as well. And
Right.
even though the FDIC will come in and say, okay, Chris, we'll insure you up to $250,000 for your account. If some of these big banks have runs and they fail, the FDIC doesn't have enough money to bail all of the big boys out. They're designed to help a small regional bank that has a failure. FDIC is big enough to come in and take care of all those depositors like they did with SVB last year. But the real trouble is when you have a large concentration of money in a small number of banks like we do right now, and you realize, a little over 40% of U.S. deposits are uninsured, then that's where it can be a big problem that ripples and affects all of us. Even those of us that think we're being smart and safe by not keeping too much in these individual accounts.
Yeah. Well, and it just speaks to yet again another vulnerability in our banking system. And in this article that I believe it, yeah, actually, I'll pull it up here. The last paragraph, I'll read it. The FDIC pointed out in its recent report that the 7.7 trillion figure of uninsured deposits
Mm-hmm.
represents 43% of domestic deposits.
Yeah.
They're getting close to half. That
Mm-hmm.
7.7 trillion represents half of all deposits out there, we could say, are not insured.
Right.
But then it
Big
says,
number.
but they added that historically losses to uninsured depositors have been small, as though there's some reassurance in that.
Right.
As even when banks fail, uninsured depositors, quote, do not incur a loss for the failures in which uninsured depositors incur a loss. The dollar amount of the loss was small in aggregate. Now you have to read that a few times till you really understand what they're saying. But at the end of the day, I don't take any solace or get any peace of mind out of knowing that, even the word historically, which great,
Yeah.
okay, historically hasn't been a problem, but when you're talking, 7.7 trillion, and all it really takes is a few bad banking decisions, investment decisions, or a few wrinkles in the economy that are well beyond the bank's control, and now you've got some serious issues on your hand.
Yeah.
So this being said, I'll segue right into, I think, an excellent thing that everyone should be doing is diversifying their assets. Don't have all your eggs in one basket. Part of that being have your money into maybe some stocks, bonds, mutual funds, real estate, gold, silver, some in cash. But let's talk about silver in this next
Yeah.
article. And the reason being is safety is key. The good thing about gold and silver, it's tangible. The value of it is based on what it is. It's not based on a debt obligation or somebody else's ability to pay it back. So it's a good, safe place to put your money. And what I mean by that, if you take an ounce of silver and you put it in your pocket today, heaven forbid, but if you were wearing those same pants a year from now, you pull that silver out, it's still sitting there for you.
That's right.
And the value of it will be somewhat market sensitive, but at the end of the day, you'll have something that, since literally the beginning of time, has been of a lasting and sought after value. Well,
Yep.
in this article here, it's talking about how, silver prices, which are in the high 20 range right now. They expect to see in relatively short order here, sometime I believe it's towards the fourth quarter or so of this year,
Mhm.
silver prices hitting as much as $34.70, which would be a pretty significant move,
Yeah.
even if between now and year end, percentage wise. However, they're also talking about once it hits that, they then anticipate it going to the 48 to $50 range. And
Right.
what's key or nice about this, you start hearing that, something that goes from 28 to let's call it 28 to $34, then goes to that 48 to 50. Those are significant moves. And so you not only have the advantage of that tangibility and that safety, but you also have the advantage of some better appreciation and growth. But they also explain why they're saying that. And I got to tell you, like they have a good track record here in their
Yeah.
predictions. So is this something that you would expect to see, or is this something that is just a pipe dream by somebody who's very bullish on silver?
Right. No, this is very realistic. When I hear somebody telling me that, silver is going to be 150 or $200 an ounce in the next year or two, even though that could happen, when I hear those numbers, I think, okay, I mean, there's a little bit of optimism, baked into the figures here. But what you're talking about, or they're talking about in this article, going from, 28 to 34, 35, and then obviously the next jumping point being, 48 to 50. Those are very doable numbers. They point out a couple of the obvious things here, or at least obvious to those of us in the industry, that gold prices are expected to continue to rise, and gold and silver follow each other fairly closely. The U.S. dollar really is losing a lot of appeal. I know we talk a lot about BRICS and inflation and the problems that the dollar has on our other programs. So people are probably aware of that. But the U.S. dollar does not have the allure that it once did. You don't have everybody scrambling for it like we used to. And obviously inflation moving up. These are all things that would help to push the silver price. And again, it's really not that big of a jump. Then throw in there that all the manufacturing, which we've also talked about, solar panels, electronics, circuit boards, all of these things that we see more and more in our daily lives cause a great demand for silver. And we've had silver shortages in 23 and 24 as far as the amount of silver that we can mine and process. So when you consider just those variables, I mean, if you're a nerd and you want to geek out, this is a great article because there are a lot of charts and there's a lot of specific data. But just taking those few points that we hit on that are a little bit more common, just those reasons right there make it a really reasonable guess. So I definitely think it's something that people should look into, and like we were talking about with our bank deposits. If I have $25,000 sitting in a bank deposit, if there's a problem in the bank, am I going to get my money back? I mean, I hope so, but there's a chance I won't. How long will it take me to get my money back? If I have that silver sitting in my safe, I can go pop in the code and open that door and have access to it at any time. And whether it's $28 or $35 or $50, I'm not going to care so much. I'm going to be thrilled that at least I have it. I have access to it. It's something that has had value quite literally for thousands of years. And I could take that anywhere in the world and use it to convert to another currency or to pay for goods and services. So I think with that kind of I guess in my mind, practical use and benefit for silver, I don't see why everybody wouldn't go out and at least get some.
Sure. Well, so the moral of the story with this podcast is fingers crossed as far as the banks go that we don't have anything bad happen with these uninsured deposits. Number one. Number two, get diversified in silver. So you have yourself
Yeah.
something tangible and something that by many people's account looks like it could be one of the better investments by the time 2024 comes to an end. If you want to know more about that, more about silver, and an excellent actually opportunity to get into silver, as you'll see on your screen, or those listing you'll see in the link. At Swiss America, we have a very excellent introductory offer for those looking to kind of get into silver for the first time. It's a limited quantity and a special pricing on some Walkie Liberty halves. Find out more about it. Contact us at 1-800-289-2646 or visit us online at www.swissamerica.com. The only other thing I'd ask you to do is if you're not subscribed to this podcast, please do so and follow us on social media if you're not doing that as well. Chris, thank you for the information, and we look forward to watching if your predictions were right that silver's going to explode this year, which I know they never necessarily
I'm sure it's 100% confident.
Well, today being December 31st and silver's doing well, we'll give you some of the credit. How about that?
There we go. I'll take it.
Fair enough. Well, perfect. And for those of you tuning in, thanks for doing so, as I mentioned, and we look forward to talking with you again sometime here soon. Enjoy the rest of your day. We'll see you then.
Take care.